What's going on, traders? I'm Devis from Trading with the Bulls, and on today's topic, we're actually going to be covering the opposite of what we covered on last video. Instead of scaling out of our trades, we're going to be scaling in and basically adding extra entries as our trade keeps moving down or up, depending on what you're taking. But if it's a sell, we're going to be adding more entries, basically maximizing our profits. Of course, this is a little bit more risk, but you do get that extra reward. Before we do that, go ahead and drop a thumbs up, subscribe, and comment what Forex related topic you want me to cover next. Alright, traders, so on the last video, we talked about the importance of scaling out and basically taking some profits out as the move is going on. So if you're going for a big swing, I always recommend, especially for the new traders, to take some profits, 100 pips or 50 pips, whatever it is, throughout the move, throughout the swing, and of course, depending on how long you're holding it. But on this video, we're actually going to be talking about the complete opposite and basically how you can scale in and actually, instead of, taking out of the market, you're adding more orders into the market as the move goes on. So let's break it down here. So that same entry that we spoke off on last video, which is again that clean and simple price action setup. Very simple. You have that support, then over here broken, then here retested, and now turn resistance. So support, broken, now turn resistance here at the retest. Simple setup, but works a lot of times. So you get in your entry, and then as the market goes on, so you can now start to zoom in on the 4 hour. And we're gonna go ahead and delete this previous trade for now. So right here, as the market starts making its move down, if we bring out our calculator by holding shift, once we go 100 and something pips into the market, into the trend, we're gonna see some sort of pullback, and we do see it here. Here we do see some support. Right here we see support with these wicks here, but we do see a lot of resistance. And of course, overall in the daily, we're still on a bearish trend, so you want to be looking for that bearish momentum that's still left in the market, especially if you're looking at the long-term trend of the market. And here we see one big wick. Here we see another big wick to the downside, and then we see a bearish engulfing, a lot of wicks, a lot of rejection, and we get 1/3 touch. Again, a lot of rejection, and then if you go to the 2 hour, you start to see that bearish engulfing. You start to see that wick, almost a little bit of maybe market manipulation, taking out some of the traders that had gotten in these entries and that were in break even, or they had tight stop losses. So you always want to have stop losses. That's why I said nice and wide. Of course, still keeping that 1 to 2 risk to reward that we talked about. That's the golden rule. But you gotta let the trades breathe, because as you can see, sometimes you do get a little bit of market movements, manipulation, some people would call it. But whatever the case is, you want to have your trade have room to breathe. So if you had entered in around this area and you had given your trade enough room to breathe, you could have seen a minimum of at least another 150 pips in profit. Guys, you could keep scaling that in, and of course maybe found another entry right around here. You would have, of course, put in your break even like we always do and would have been stopped out. But I mean, in that first original trade that we took on the daily, that trade saw over 200 pips. This trade that we took right around here, it saw 215 pips. And of course, we scaled out at every 100 pips. So this trade, from that first entry, you would have collected 200 pips. And then if you gotten in on that first entry here, again for another second entry in the market, you could have taken this position down to another 100 pips, and of course scale that on some of your positions. And that is how you slowly compound your account, like we spoke last time. And that is the main purpose of this game, this trading game, is to slowly minimize your risk, always minimize your risk, and slowly compound your account. So always add in little percentages of profit, and always minimize your risk and preserve your capital. Again, thanks for tuning in, traders. Don't forget to comment what topic you want me to cover next. Hit subscribe, and I'll catch you on the next trade.